Let's start just by asking each of you to introduce your businesses briefly, so we've got a sense of what they do. Lisa, why don't you go first?
Thank you, Darren. Thanks for having me. What attracted me to Aspinal actually is the way that the company behaves very much in a millennial fashion as a company, as a young entrepreneurial, almost startup mentality. Really 15 years in existence now with very high growth over those 15 years. And yet the brand has the perception of a legacy heritage brand. And all of the support and confidence from the consumer in that way that the brand has been built, I think very cleverly by visionary Ian Burton that founded it, as an online brand, but also with all the quality that you'd expect from luxury at an affordable price. So this marriage between, young and heritage is really interesting.
And I see you're sporting a number of Aspinal products there.
Well, of course.
Some of which are visible through the see-through clutch bag. I don't
very
know what
popular at
it's called.
stadiums these days, particularly in America with the security. Our business is, the split is very much probably 40% now handbags, 60% still leather goods, which is where the business was founded. We're also fortunate to be about 50-50 online and bricks and mortar. So a really nice business split. Probably I could do a wallet count in the room and probably a number of hip flasks at home. The handbags are now good. The handbags are now the highest growing area, and of course that's good for brand awareness because we don't see the wallet in your pocket too often, or the hip flask at home. But of course there's a great gifting business that's really important to us. We are predominantly retail and direct consumer relationships. We do have a small B2B business, and of course I'll just put in a sales pitch for corporate gifts.
And the reference to stadium a few moments ago is a very helpful and unrehearsed segue into Spektrix, Michael. So why don't you tell us a little bit about your business?
Sure. So probably best to start with the mission, which is that we believe that entertainment experiences, whether theatre, sports or music, make the world that we live in better. We're not going to do that by being actors or musicians, so we have a few of those in the business as well. But our mission is to make more of those experiences happen by helping entertainment organisations run more efficiently, increase their revenue streams and transform relationships with audiences. And we've been doing that through providing essentially the first multi-tenant SaaS platform that's basically an ERP system for entertainment organisations, providing them with ticketing, marketing, reporting, analysis. And started very small 11 years ago, gradually built a platform and a client base to the point where we're now displacing the big traditional systems in some of the largest arts organisations. And at the moment we're focused in the performing arts industry, but that will open out in the longer term. So this year we'll process about £500 million of entertainment ticket sales through the system across about 350 organisations, including now some in North America. And just a team of just under 100 now.
So you've grown quite significantly already then. How have you really gone about achieving that? Because from a standing start to where you've got to now, that's been quite a journey.
Yeah, absolutely. I mean, certainly when we started, we massively underestimated the complexity of the sector. We saw all these traditional bits of software, but hadn't realised just how long they'd taken to get built, to just do the things that these organisations needed to do to just run. So we really focused on sort of doing it right. We're pretty patient, always spending money very carefully, so growing organically. I think that the nature of being that core business software is that once you're into places and doing a great job, you're there to stay. And I think that's what got us to a place where Santander was a great fit for a partner, because we've got a recurring revenue stream that's sort of very reliable and predictable based on the revenue of our clients, virtually 100% retention. And you guys were able to look at that and lend off that, looking at the fact that if growth were to slow down, the underlying business was highly profitable.
But for the avoidance of doubt, when you started as a startup, you had some friends and family money, but that was about it. This is very largely a business that's that's been grown on the back of reinvesting its profits and the cash that it's generated?
Yeah, I mean, so the investment from Santander last year was the first outside. We had a couple of 100,000 from friends and family early on, but otherwise that's been it so far. And that investment was really, I suppose, reaching a point where we wanted to take more advantage of the opportunity. You covered earlier, there were some examples, and I think it was in the Scottish Equity Partners about funding senior roles, and that's really what it was for us, of realising that to start to scale faster, we needed to bring in some new senior hires, bring in experience from outside the business, and bring in funding for a sort of step change to be able to do that.
And Lisa, your association with Aspinal doesn't go back to the start, but you came in last year from a very different background, a large corporate background. So I guess culturally you found it quite different moving into a high growth SME environment.
Yes, very energetic and passionate environment where we are. Of course, the business is fast paced, no matter what size actually, because we're in a very changing environment by definition, with seasons and fashion, and that's, I suppose, we love that. We love the fast pace and the change element of it. I didn't always work for a large company or group like LVMH, but I've had experience of both. I'd forgotten some of the growing pains of going back to a small company. When you look behind you, who's taking care of that? Oh yes, it's me. Achieving scale does come with growing pains inevitably. I'm sorry you couldn't hear me before, by the way. I realised the mic wasn't working. And balancing adaptability with introducing some structure, process and corporate discipline is clearly a challenge as we grow for a business that's really come up, obviously from scratch quite quickly, with a founder mentality and very much a family business. So finding partners who understand that, and I think we've been particularly fortunate with Santander. When Patricia Bottin set up the Growth Capital Fund 5-6 years ago now, I believe it was with very much that family business and culture in mind, and it really shows in the relationships that we've developed. So what we've found is that the team really go out of their way to understand our business and what we need, and to develop relationships with the teams. Inevitably, we have some challenges as leaders of SMEs, and also unexpected challenges at the moment in the retail sector, as I'm sure you're all familiar with. This week's particularly, we're all on edge. And some businesses won't survive this structural change in the market. So we need to remain agile, to be nimble, and that's great. One of my colleagues compared the move from running a steady ship of a larger organisation within the structure of a very safe group with a framework, is that it's like going from a safe ship to 10 speedboats on the water all at once, which I'm becoming quite comfortable with that analogy now. We need to be innovative, quick to react to shifts, and in this unstable environment, I do believe, being rather cup half full myself, that the threats of an unstable environment also present opportunities for those of us who are on the lookout for them.
I should say that Santander Corporate and Commercial Bank is younger than Aspinal. We're celebrating our 10-year anniversary today. So we like to think we know what it's like to be an entrepreneur, but we might just park that notion for now, because I'm sure that we also have a measure that puts us as the biggest bank in the world. Every bank can say that. Our measure is by number of overseas branches. I'm not sure how long that will be the case, but anyway, we've found particular challenges recruiting the right people for our business, and I'm sure that's even more acute for you. You've both got really great CFOs that we collaborate with a lot, but finding those people can't have been easy. Michael?
Yeah, I mean, I think along the whole journey, finding the right people has been one of the trickiest areas. I think I've made lots of mistakes in the past of hiring the wrong people, which are then expensive and pretty harmful for business along the way. So big learning for me has been never be in a hurry, always wait till you find the right person. But then when you do, really making sure you sell the business and make sure it's a two-way thing, and you've really got to there's a lot of great opportunities out there. So you've got to really put your best foot forward.
I guess it's the same for you, Lisa.
Well, I famously went into my first board meeting without a CFO, who departed a couple of days earlier. So that wasn't a fabulous start in that direction. But and it took 6 months to recruit the right profile. But that's also because I was really mindful it was a fantastic opportunity to get a business partner for me to run the business. And I wanted to particularly do a casting for this profile that knew what that journey would look like from, say, 30 to 100 million as an illustration of the leg of the journey that we're on. So Barry Webb joined us in April, not long ago, with 15 years experience at Fred Perry, so obviously quite relevant experience, but not only was the casting of expertise and skill set crucial in my mind, it was also the personality fit. And Barry's really calm, so that's great.
I think as ever with this kind of thing, you think you're going to have more time than you really do, and at times racing ahead. And I want to get to funding a little bit, but first, let's cover briefly, if we may, internationalising the businesses, which I highlighted before as both an opportunity but a challenge. And you're both moving in different directions. Michael, the US is a market you've identified as having huge potential for you and is the subject of a current investing round for you. Lisa, you're very much more active in the Far East and the Middle East. How have you gone about identifying the right markets for you and executing that strategy? Michael first, maybe.
Sure. I mean, North America is the natural one for us because the way these entertainment organisations work is similar. And there's a lot of parallels and relationships across the pond that makes that work. But we've now been there for 4 years, but the first 2 years we had a few false starts. Massively underestimated how hard it would be just to grow a team. I think the market is there for it, but growing a team remotely is much harder than I thought it would, and you have to put so much conscious effort into that. And I think to growing a culture as well, there's a lot of parallels between the culture, but it's too far away for it to just be the same. It's got to grow something its own as well. So leadership on the ground has been the biggest challenge. We're now on to our third one that I think we've this time got it absolutely spot on. But ideally, I think everyone says you try and send someone senior from over here, but we weren't in a place where we had that. So, but yeah, I'd say for me, team has been the biggest challenge. And the other thing is, to go into America, it's only worth doing if you've got something different. Otherwise, better just to leave it to the Americans. But that's where I think because we're in this performing arts world, there are a lot of those parallels that make it a good fit for us.
And you've been over in the US yourself a lot, so even for a technology business, even with the internet, there's no substitution for being there in person.
Yeah, and I underestimated that and really didn't realise I'd have to. I mean, I'm there once a month or so, and ideally it would be more.
So collecting some air miles then.
Just a few. Yeah.
Lisa, why the Far East?
For all those reasons.
Okay.
I think in Aspinal's case, and the more air miles, they're going the other way, for all those reasons. But also, Aspinal was built very much in the UK as a British brand, a very well-loved, almost national treasure, well-kept secret. So my job is to tell more people, get the brand out there, tell the stories, and the UK is by no means saturated as a market for us at all. We're still a very small company. So we can definitely grow at home and abroad. Travel retail is a particular opportunity here, and if anybody's going through Heathrow, see our pop-up shop in Terminal 5, which has had amazing traction and is a great window on the world, so that's a great way to internationalise from home. Looking east, I think was natural for us. We had actually quite a similar, very tiny level of business, direct online when I started, in both China and equally in the US. But a lot of traction in China, which also we've built out through online marketplace model. So very direct and fast to market. We've just launched softly with JD.com and with Tmall, as well as all the other major marketplace platforms, and looking east seemed very natural to me. I've worked in the Far East a lot. We've just, and also we're halfway there. We've just re-signed our partnership after the first 5 years with the Middle East partner, which was the only serious international partner that Aspinal had when I started last year. So now they have 3 stores, 2 in Abu Dhabi and 1 in Kuwait, and we're just opening Dubai Mall, which is a real game changer for us, at the end of this month. And we've had a pop-up in Dubai Mall to kick that off and to tease it in this month, which has been phenomenally successful even in Ramadan. So now we're also opening Saudi Arabia, which will be a big step forward. And China just has great traction. I think anybody not looking at China is making a mistake. We have a lot of serious interest from big partners who want to really take the brand forward there. And then, of course, Southeast Asia, Japan, and Korea all appear to have appetite from the brand. So we're starting to put down footprints from here to Australia in that direction. And I spent a week in New York just recently starting to think about that and how the sequencing would be. But obviously for us, America is the most highly competitive market, the most difficult, and you don't get 2 chances. So market entry is really has to be carefully considered. I think we'll probably approach it through an exclusive wholesale relationship to start off with.
Okay. I can't see any questions yet. If you do have any, slido.com, #BVCA. We might have some time. But let's move on to funding, because this is something that's occupied a huge amount of your time, Michael, recently, around your US expansion project. What have been the important factors for you in assessing what is really a milestone for the business?
Yeah. We're in a nice place where debt and equity are both available to us in the right sort of levels to do
Fighting
what we want
for
to
you, in
do.
fact.
Yeah, and choosing between has been hard because on paper the cost of debt is a lot less, obviously. And I got to the stage of actually being comfortable that we wouldn't be risking the business with debt either because of the model and the assurances from you guys. But I suppose it was the realisation eventually that equities gives you that ability to take a bit more risk and have that longer runway, particularly for something like North American growth. And ultimately, the stage we're at, the risk is of not doing enough to take advantage of the opportunity available, which equities have lets us do. But that said, to me, if I look at the next few years playing out, I think it will be a mixture of both. And actually, the way we're looking on equity front with, we're actually venture capital trusts are really good fits for us. That's much more limited in what it can do compared to what you guys are able to do. And so we see over the next few years, likely a mixture of things happening to enable us to do what we want to do moving forward.
So you have chosen equity rather than debt, and I'm
not
not bitter about it. It's fine, because I guess that the opportunity is so huge that the flexibility that you require to manage the pace of that growth is something that maybe doesn't align quite so well to a conventional bank approach, however progressive we like to think we are. But I'm interested, and I think the audience will be interested to know what was important to you in choosing an equity investor, because there's lots of them out there. What led your decision making in that regard?
Yeah, the thing that enabled us to narrow it quite quickly was, I have a very long-term view of the business. I've been in it 10 years. I could see being in it 10 to 15 years longer, and I think the nature of what we're doing, it can't happen fast. We ultimately want to be the Amadeus of the entertainment world, and that can't happen in 3 or 5 years. So for us, it was finding someone who had that long-term view and was genuinely able to be aligned for the long term, so evergreen funds essentially. And then I think just getting really comfortable on the terms, and really just backing the business and that long-term vision, I think is key. A lot of it is chemistry, yeah.
Well, they talk of it as being a marriage, don't they? An investee company and its investor, and so the courtship is always quite an interesting relationship to see build. Yeah. Something very exciting has happened. We've got a question, just one. We've got less than half a minute left. So much we were going to talk about that we'll have to leave. But a question from Gerard McBreen, and this might be for you, Michael. I'm not sure. How do you convince investors that product market fit is important, arguably more important than traction?
How do you convince them?
Or Lisa, you might want to jump in there. I suppose you have traction in the UK and overseas markets are different. And I know you've kind of evolved your product to suit the US. Maybe an example of how you've done that.
Yeah, I suppose, to me it was a huge part of investors getting comfortable, so demos of the product and really understanding, what it does and backing that. And then I think the other bit they were looking for is around proven execution, so ability to actually go and make it happen. And that's the bit, obviously, for US it's still early days, but that we shown had happened over here. They certainly, I think they were very much looking to go, is this what it says it is, and covering that off was key. If that answers it.
Go on, if you're quick, Lisa. I was going to wrap up, but go on.
I'll be quick.
Yeah.
We're lucky enough with the online direct relationship to be able to test products in markets, and so we know there's an appetite in the market before we obviously venture in there. And internationalising the business, as I think you mentioned earlier, helps to iron out all those peaks of trading that are very UK-centric, so which also helps us with our stock management and so on. So it's really important. We have traction at home, but how we build that in the markets is absolutely vital to the business model going forward.
Thank you. I was going to finish by asking, how did they see the future? But we don't have time for that. I'll praise you their answers. It was going to be optimistic, and they're very excited. And I'm sure from hearing their stories, you'll understand that and buy into that. So, Lisa, Michael, thank you very much indeed for joining me on stage. We'll hand back over to Tim. Thank you, everyone.